Crypto Hotep here with another investing video. We're on week 26 of tracking the family portfolio. As always, guys, we do weekly updates of our family portfolio, and these are just a collection of stocks that my family and I selected, and we in turn use M1 Finance as our broker of choice to create individual pies within this family portfolio. Each pie is designated to each family member and his or her allocated stocks that they chose. In a nutshell, I created a short list of stocks that I asked my family to choose from. They chose some of the companies that they felt strongly about, and then we made the family portfolio in M1 Finance. None of this is financial advice at all. This tracking is just for educational purposes and to also track the investment journey to showcase important aspects of the market and emotional as well as intelligence and emotional intelligence when dealing with investing over the long term. With that being said, guys, we can jump into week 26. So before we go to the current week's balance, we look at last week, and last week the balance was 860.99 with a weighted rate of return of 13.49%, so almost 13.5%. Dividends earned $6.35. This week we did go down 855.89. Dividends earned $6.84, so $6.84, which was great. And then the weighted rate of return went down to 12%. Now, year to date, that is still a good return. I always say, any return above 10%, and as long as you're beating inflation, you're doing something well. But why did it go down? Well, the markets did have somewhat of a sell-off this week. So a lot of stocks have gone down, and we'll showcase that when we open up the charts here. But we'll continue to do what we normally do, and we'll go to the activity of the portfolio. So today, or between last week and this week, we actually had a lot of dividend activity. So as you can see here, we had a plethora of companies: Clorox, Starbucks, Aflac, Visa, Church & Dwight, Kroger, Walmart, the Smuckers Company, Cintas, Pfizer, UPS, and TJ Maxx. All these companies generated dividend income, and they dividend income for the month of September, the beginning of the month of September, and then also the end of August. Now, you may look at these totals and say, hey, Crypto Hotep, that's great and all, but you're looking at a penny, you're looking at 2 cents here, 17 cents here. You are 100% correct. But my rule, if you've been watching this channel, is with these small amounts here, they will build up over time. It's almost like the snowballing effect. And when you have dividend related companies or dividend appreciating companies, that snowball keeps going in terms of dividends. So as we look at the market, with the market dipping, so stock prices are essentially coming down, your dividends are somewhat consistent. And so that's why a lot of dividend investors love when stocks come down, because they can buy it for the cheap, and they're also still being quote unquote paid for holding that stock. We did have one buy today, and that buy was for CrowdStrike. That was from my account. So I bought some CrowdStrike just because it was essentially going down. It's still in my quote unquote meme stock section of the portfolio. So I just bought it because it was on the cheap right now. If we go to the holdings, our total holdings across everybody's pies are 54 positions. So we invest into 54 stocks with a cost basis of $803 and a value of $855. The unrealized gain currently is up 6.5% or so. So not bad at all. In addition to that, if we look at our dividend income from the prior month in August, we'll see here we generated about 63 cents. So again, not a lot to most people, but if you've been following this channel, we've been building our positions from this small account. The small account had a balance of about $150 at the beginning of the year, and now has over 800. So with that being said, the dividends will come. They're just coming in slowly. But dividend investing is a long-term gain. We're just not getting in and getting out of positions very quickly here. These are long-term positions we're looking to hold for years. But with that being said, it was 63 cents. Some of the bigger top holdings were Starbucks gave us a dividend of 17 cents, Apple at 10 cents, and then Procter & Gamble at 6 cents. Our total income currently from dividends from the family portfolio, $11.09, not too shabby at all. For September is going to be a big month in terms of dividend income for us. So currently, what we've been paid out is 60 cents. We just saw that in the previous screen. We have $1.16 pending, and then we have an estimated additional 59 cents coming in here. So in addition to that, we have M1 Finance averages our monthly dividend income at 92 cents. And then you can also project this out for the next 12 months if you wanted to. These are all good tools that I really like that M1 Finance did come out with, especially for the dividend investors, so you can easily track that income in here. So let's go to our portfolio as we always do, and let's start bottom to top. So at the bottom, fortunately, my wife, again, with the stocks down year to date, 34%. Market gain of negative 17. So somewhat staying stagnant here at $56.08 for her balance. Celsius is dipping. Celsius is now below $40, I believe. I believe it's like 36 right now. So down 72%. Still buying Celsius. And my thought process with Celsius right now is nothing is showing me, besides the stock price, nothing is showing me that things have changed around in the company. The opposite is actually occurring, where they have good earnings, they're generating revenue, there is growth. I really just think we're looking at a stock that's cheap right now, and that has room to move, or that will have room to move once that bottom happens with the stock price. Pepsi still doing what Pepsi does, up over 7.5%, and then Google doing Google's thing, up over 3.5%. Next, we will go to our middle. Our middle has a very sturdy portfolio, very sturdy, as you can see, very good track record, up over 6.25%. Dividends earned 18 cents. And Starbucks we have is down currently 3 cents. Target up, Costco up. Costco's been the best position for our middles stock. Very, very good stock here for Costco. Costco did open a new location overseas as well, and that's been getting a lot of attention. Amazon down a little bit over 1.5%. Not too worried about that. And then Nintendo up over 1% here. Let's go to our oldest stock. Our oldest has cracked 100. Very good thing to see. So our oldest has cracked 100. Weighted rate of return year to date over 19%. Love that. Dividends earned over 50 cents here. And again, as you all know, with our oldest, kept it real simple. 3 stocks: McDonald's, Apple, Costco. 3 main players in their industry, 3 companies that aren't going anywhere, and 3 companies that you could hold forever. So as you can see here, double-digit returns and gains, if you will, year to date. Apple over 31% gain, just fantastic. Love seeing the over $100 mark for our oldest balance. Now the next portfolio, our youngest said, hey, don't forget about me here. I'm also cracking over 100. So our youngest over $100 balance here, 24% weighted rate of return year to date. Dividends earned only 14 cents. But again, you look heavy hitters here, right? So Nintendo, just like our middle, up over 1%. But Tesla, again, we keep buying Tesla. Why? Because we believe in the company, we believe in leadership, we believe in the mission of Tesla. Tesla's not going anywhere. Not going anywhere at all. Apple, again, very similar to our oldest, with a double-digit return on there. And then Starbucks, we were buying Starbucks at a lower rate for our youngest than we were for our middle, and that's why you have a positive return here at over 20%. Again, 2 family members over $100. Fantastic to see. If this is your first watching of my video, please go to the first tracking episode of the family tracker here, just to get the methodology and just to understand why I'm doing this, and also to see what the balance was at that time as well. Last but not least, we're just going to go to my stocks really quickly here. Very consistent, up over 10%. I do like seeing that. I like seeing my portfolio in a double-digit return, over $5.50 on the dividends. Can't shun that enough. I love seeing that right there. And then these are my categories for my stocks here. So technology still up over 4% despite the sell-off. NVIDIA is selling off currently. We can hop in and see what we got going on here. But I'm still up over 17% on NVIDIA. Apple up over 35%. Everything's up. AMD is down over 33%. I think this is going to be turning around. I think AMD is going to be turning around. They did kind of poach one of NVIDIA's C-suite executives came over to AMD this week. We love to see that. Coinbase down over 37%. Not worried about that at all. I love me some Coinbase. Love crypto. Crypto as a whole is down right now. So this is going to correlate to Coinbase's stock as well. Consumer staples. I wouldn't say this is surprising, because this is what I figured would happen. If we had economic uncertainty that we do now, then the consumer staples and shopping sector will more than likely boost and keep my portfolio in the green. And this is why. Companies like Procter & Gamble, companies like Costco, Walmart, Clorox, Colgate, which hit an all-time high, which crazy, yes, the toothpaste company, McCormick, Church & Dwight, Heinz, Kraft Heinz, I should say, and TJ Maxx. We have all of these companies that they're very, I would say, boring companies. They're very boring, but they are dividend companies, and they're consistent. Plus, they've been around for over 20, 30, 40, 50 years, some even over 70 years here. But the thought process is you have money that's going to be taken out of the risked assets, which are typically technology stocks and meme stocks and those type of things, and pushed into items that are more consistent, such as consumer staple goods and companies that have a good track record and have been around for a while. Similar to finance as well. Under the finance sector here, you're looking at over 17% weighted rate of return invested in the companies like Aflac. It's been around over 100 years. Moody's Corporation, same type of pass that they have. American Express and Visa. What else do we have here? And then the real estate. This was actually really good here. So my real estate sector, as we all know, if you've been watching, it only consists of 3 pieces. We have public storage, PSA, Federal Realty Investment, FRT, and then Realty Income, O, here, all in the double-digit returns. And public storage just leading the way here. I love public storage, and I love that stock. Can't get enough of that at all. But as you can see, the whole stock minus the meme stocks here are in the green. This is closing in here though, because last week the meme stock section, I believe, was down 9%. So we're closing the gap here on this piece. But just trying to round this out here, the family portfolio, we have $855.89. up over 12%. Dividends earned up over 6,050 cents at 684. A couple things to keep in mind here. So Warren Buffett, and I've said this before, and if you've been watching these videos, you might be getting sick of me saying Warren Buffett's name. So one thing that I did was I covered this in a previous video where Warren Buffett was sitting on about $277 billion with a B in cash. There's a reason for that. I thought to myself, well, how much cash was he sitting on in March 2020? And the reason I asked that was because the Fed rates, or the Fed's cut rates in March 2020, and then they did rate hikes afterward. The Feds potentially will be cutting rates potentially in September. Do we have a crystal ball? Do we know that for certain? No, we don't. But they will be cutting rates per Jerome Powell's message recently. Everything's pointing to September, and it could happen, but we don't know 100%. A couple things correlate, though. In March 2020, right before the cut, the Fed rate cut, Warren Buffett was sitting on $128 billion in cash, which had people looking at his cash reserves or what he was sitting in cash and wondering why. And there was a reason for that. And then the Fed rate cut happened and the whole market dropped. And we'll show a chart on that. Now he's sitting on $277 billion, which is 100% more or double than what he was sitting before, and we're nearing a Fed rate cut. So we will look at the chart here, and we're going to make this quick. We're going to look at the chart of VU, okay? And I'm going to switch to a weekly chart, and we are going to go back in time here. So we are going to go to March 2020. So Fed cut the rates in 2020 here, and this is March 2nd, 2020. The market dipped over 32% in 1, 2, 3, 4 weeks. So a month. It dipped over 30% in 4 weeks. That was a drastic fall. Then, shortly after, price stabilized and then proceeded to go on a bull-like run from March 20th to, I would say, December 2021 without any type of change of character in price or break of structure. And that percentage, it went up over 96%, almost 97%. So it took a dip in the negative over 31% to make up for that negative and to then go on a bullish run to 96%. So with all that being said, history doesn't repeat itself, but it does rhyme. Every time the Fed cuts rates, you can expect the market to dip. Warren Buffett is sitting on this cash, and I believe that he is thinking that the same thing may happen, or something very similar that happened here. So again, not financial advice at all, but if you have some sitting cash, this could potentially be a way or an opportunity if the Fed does cut the rates. But as always, guys, not financial advice at all. Please do your own research. If you did find these videos helpful, feel free to like, subscribe, comment, let me know what you think. And as always, thank you and happy investing.